good evening, everyone,
That's good.
and welcome to the Defi Raiders AMA with SubZero Finance in the Defi Raiders server. I'm Julian, and I'm here with Mr. Shilbro Baggings, the greatest nickname created lately. He recently joined our mod team, and we are very happy to have him with us. Today we are hosting the team from SubZero Finance, a project that started out as a regular Tom fork on the AVEX chain and is now evolving to something new. So good evening and thanks for joining the show. Stay, ask questions. The two best ones will win $50 worth of Z share. So welcome, Mark.
Thanks for having us.
It's great to have you here. As I said, I've known you since the beginning. We joined the pre-sale, so I know that you've been working hard into trying to make something more of SubZero. But for those that don't know you, maybe tell us, for starters, a little about you, the team, how you got into crypto, and how did you end up making SubZero?
Yeah, so I think, we do certainly go a long way back. I think when we first came on for an AMA, it was nearly 6 months ago now. So that's a pretty long time for a senior age protocol to be around and for a team to keep working on a project. But we've always had long-term vision with this project, and we obviously want to, take it somewhere meaningful that we can have some impact in the world of DeFi. So it was started in March, pretty much just as a tomb fork, and our intention there was during the kind of wave of tomb forks to peg to tomb finance and have an opportunity to build on that ecosystem and extend that across AVAX. But obviously that was probably, that sort of vision didn't really pan out with the price falls in a lot of DeFi protocols. So we've had to pivot fairly quickly from that, which we've done in June. So we've switched our peg from Tomb to 0.01 AVAX. So the actual, I guess, where we originally came from, we worked on a DAO project. So that was Papa DAO. I was originally just a community member, to be honest, that took an interest in the project and started doing some development work with it. And we formed quite a good team of developers out of that project. So myself, Jordan, who's doing marketing, Sushimun, who's doing operations, I have another developer, Greg, and we've started to bring on another couple of people in this project now, where we're more focused on sort of DeFi as a service. So we had to transition, obviously, from that, I guess, just building a tomb fork for the sake of artificial APYs is great in terms of bringing in initial liquidity, but obviously we know it doesn't last long, and we've only seen the sort of the life of an average tomb fork shorten over the last 6 months, less and less. So we almost immediately we identified that we did want to be a real yield project, and that we did want to build out legitimate services for our users and build an ecosystem. So that was really one of the initial selling points as well. It wasn't just here's a tomb fork, now we have to pivot. We always did want to be a real yield protocol, and we did want to build out ZSwap and ZBank. They were the two main service areas that we wanted to build, but we've sort of added onto that scope a little bit with some additional projects and a bit of a change of mindset as to what the project entails, which is to now become a decentralized venture capital type protocol where we actually do invest in other projects pre-launch and provide our users with access to opportunities that they wouldn't normally have access to on market. That's going to be the kind of intent behind the protocol, but we're still building out this ecosystem. It's still going to have value in terms of the DeFi ecosystem that we envisioned early on. Yeah.
Right. As we have seen, most Tom forks do not live for long. Even in the Tom fork season, they didn't live for long. So this, I know that since you started, yes, you said that this is gonna be an ecosystem. So it's great to see you working towards that. And you're right. For 6 months to be here and building, it's a rare thing. Tell me, how is Papa DAO doing?
So Papa DAO actually, we redistributed the treasury because basically in the whole DAO season, when we saw the huge collapse of a bunch of DAO protocols and they had these massive treasuries behind them, we identified that when we're sitting at say 55 cents per token and the backing of the token was $1.80, it just made sense to redistribute the treasury, shut the project down, give people some return on their money, which was the ethical thing to do at the time. So we actually redistributed about $10 million back to the community at that point. So we haven't sort of taken huge number of measures. I can see some KYC and audit type questions in here. We haven't taken huge measures to KYC because we have, I think we've gained the trust of the community at that point in time with that redistribution. But going forward, I think it will be something that we consider again because we do want to onboard a lot of new investors as well who may not have been aware of our history and what we've, how we do essentially aim to have the community interests at heart, and that's really driving every action that we take in this protocol. Yeah.
Right. Yes. Lately, from all projects, the main question is, are you KYC it? Because there are a lot of rugs, So that's like the main question. Are your team KYC it? Which kind of makes sense. But for those that know you and the thing that you did with Papa DAO is certainly the right thing. Most DAOs just waited till the end and just died afterwards. It was much better to use the treasury and pay back the investors while that treasury had some value than to just sit till the end and wait it to die. So you kind of answered my second questions, that you were pegged to Tom, but you are not now pegged to AVAX. That was because Tom went down way too much, so you figured instead of pegging to a stable coin, let's peg to AVAX, right?
Yeah, so we are generally pretty bullish on the AVAX ecosystem and on layer ones. I think that layer ones do provide good utility, and I think that AVAX is probably one of the best positioned layer ones. It has been throughout the last sort of 6 months, and will continue to be. But we've also, a lot of tomb forks did launch and peg to stable coins, but what that can do is then reduce your upside when we do come back into a bull market. So what we've actually done to offset that is when we changed our peg, we did actually foresee that the market may continue going down and may continue dropping. So when we were pegged to tomb at say 5 cents per token, AVAX was say $25, something like that. We then pegged to 0.1 AVAX, which is a massive leap from our current price, and it would actually put off probably a lot of short-term minded Seigniorage protocol investors, because they'd be looking at it and going, okay, well, they're now at 0.2 of the peg. Why am I going to invest in this? Aside from obviously like the Z share yield and things like that. So it really did show the strength of our community and how our guys are really on board for the long term. They're not here just to farm and dump their tokens and exit within a couple of weeks like you see with most tomb fork protocols, because we were actually able to switch the peg and then continue growing. And now our time weighted average price is increasing against our pegged asset. But the reason for that is because one of the reasons for that is because we've primarily created a USDC liquidity pool. So we have two liquidity pools, but I'm also very cautious of arbitrage. So we are really trying to push the USDC liquidity pool in the current interest rates environment until things start to level out a little bit, or at least we can see some sort of return of a bull market, and then we will pivot and switch most of our liquidity into that AVAX LPs. So at the moment it's about 80%. We're basically kind of more stable backed than AVAX backed at this point in time, which makes sense given the market.
But you can switch out easily.
That's right. Yeah. So we can make the switch, and the protocol by design in the smart contracts is pegged to 0.1 AVAX. So we've got that future vision. And I think something else that we did that we don't probably talk about enough is that in doing our version 2 of the contracts, we also extended our Z share lifetime to 10 years, and we actually reduced our emissions per year. So where the average tomb fork might have 50,000 to 70,000 share tokens emitted per year, we've actually only got 25,000. So It's an interesting sort of dynamic. The APY is a little bit more realistic, I think, and something that we believe that we can sustain through development and through I guess the venture protocol, the venture capital elements that we're going to discuss.
Right, right. This is like I think the first to change the PEC token in the middle of the life of the Tom fork. So that's first, at least for me. I don't know if some other protocol has done that and still continue it to function pretty well afterwards. Because usually when these changes occur, they do L2 and practically die afterwards pretty quickly.
Yeah.
So that's
Yeah,
a
well, we've
first.
done a bit of a rebrand and repositioning, and there's a few reasons why I think people will want to support us, hopefully, and um, one of them is the additional products that we have coming out that we do really support existing investors. It's not like some teams where they'll continue to launch more and more protocols, which only really benefits the development team. I've always been focused on how we can give back to the community and the existing investors, and that's kind of the model with this protocol. That by owning SubZero tokens, you've got exposure to multiple protocols that are going to sit underneath that umbrella. So it's a little bit of a more like it's something that I would want to invest in as an investor. I wouldn't want to invest in a protocol where you just see the team moving on to their DEX token, and they release a new DEX token, but they give absolutely no benefit to existing holders of the term fork or your rebase token, or that just seems like you're forking protocols for the sake of forking protocols,
Yes.
without having an actual goal in mind. So that's where we want to differentiate, and we're probably moving maybe a little bit slower because of that, but it's in the process is really ensuring that we have good tokenomics in place, and that we're not going to have this really high inflationary elements that you see in a lot of protocols.
Yes, you should mention that you have made the the number of the shares less now. That's pretty important, and people like to know that it's more now it's more sustainable in the long run. So
Yes.
tell me something I saw, the PEC token Sub Zero can be frozen. This is something new in Tom Forks. So let's elaborate a little on that. What does being frozen mean, and why have you decided to do that?
Yeah, so this was based on us wanting to also limit the ability of users to come in and out of the protocol and take too much of their sort of share of the LP with them. So this is again another element that helps with the sustainability of the protocol. So it basically it's not like a time locked element, because we do kind of value liquidity. I think a lot of investors do value access to their money when they need it, but it does have a tax. So that's why we call it sort of freezing and defrosting, that there is a process there where you're paying 3% tax to freeze and 17% tax to defrost. And that actually, probably reduces the chance of shock movements in the price to some degree, because you're going to really think about it's a conscious effort whether you're going to actually defrost and pay the tax at a specific point in time in order to exit the protocol. But it gives back to the existing holders. So that tax, that 3 or 17%, 100% goes to the SubZero holders. So we call that token the frozen SubZero absolute zero. So absolute zero being the coldest temperature on the temperature scale. That's the coldest token in the ecosystem. That's basically the revenue share token. So when we build these additional protocols or build revenue channels through other sources, that will always be feeding back into SubZero in the form of buybacks, which then results in us depositing those bought back SubZero tokens into what we call the freezer. That's a additional rewards pool that then distributes those rewards to the SubZero token holders on the same time, on the same sort of rebase timer as our boardroom. So it's a really unique protocol element that you don't see in many other protocols, and the whole idea of it is really to apply that same effect that bonds would have in a protocol, and that
Yeah.
it's locking up a portion of the supply. So I could actually see I think there's a better solution than bonds. Basically, I could see a future where we actually get rid of bonds from the protocol entirely because there's no need to have an excessive number of tokens. You could almost do what we're doing with one token, but in a way, there is some real value I think added by what the freezer does because it gives the user the ability to decide: do I want to invest in this long term? Do I want to gain access to the taxes from people who are a little bit sort of shorter, have that shorter investment time frame than myself, which is always a good thing because I'm all about trying to protect the long-term investor because you see way too many DeFi protocols where people will, it's really just a game of who can enter first and who can exit first. It's not a genuine investment, and there's, I don't see anything being built in the way of real revenue. So this whole SubZero freezer element is designed to help increase the sustainability of the protocol while still fitting in with what a seigniorage protocol is essentially designed to do, in that it locks a portion of the supply. We actually have a visualization for that on the dashboard. The purpose of that is not to see that the frozen supply reaches 100% or anything like that. It's just to show that how much of the supply is frozen at any one point in time, and the more that is frozen, I think the theory is obviously the same as bonds, that the liquidity is reduced. It's easier to maintain peg in that sort of environment. Yeah.
The more is locked, people can see that others believe in the project and have locked money in there. So I guess it also shows a level of safety for them. Also,
that's right, yeah.
You are totally right. When I saw this, I was like, this could be a great solution to bonds. I was like, why do you even keep bonds now with this? But it doesn't support the peg. The revenue goes to the holders of the frozen sub, right?
That's right. So all of the tax revenue from that goes back to the frozen sub. With the additional protocol revenue that we're generating, there'll be an element of the buybacks will also be distributed to the freezer holders, and it'll probably be a 50-50. So there'll be a burning element as well as rewards being distributed to the holders, because obviously we do want to benefit both elements of the protocol. We don't want to just be recycling capital too much. We'd rather also be burning the supply, try and offset the inflationary element. But I think that's what really appeals to me about the seigniorage protocol in the first place versus a lot of other sort of DeFi structures like rebase tokens and things like that, is that there's a hard floor effectively in that no inflation is occurring currently on the SubZero price while we're below peg. And obviously, as I said, it was a conscious decision to commence so far below peg with the current market. But I think over the coming months, as if either AVAX comes down or SubZero comes up, we'll find the opportunity to switch our liquidity more to that AVAX LP. We'll likely remove the bonds at some point in future. I don't necessarily think it's a required element, and it might even sort of hinder us in the long term, in that people won't recognize the innovation that we're doing with the freezer, for example. We won't really be reliant on Z-bonds, because I feel like it's not especially like it, very few users actually use them now. Now that they've worked out how to invest in a tomb fork, they realize that they don't really want to lock up their capital with no risk, no chance of actually getting it back. And it's in most cases you won't see your money back, because very few of these tomb forks have returned back above peg, because they're not working actively to create value for the holders. So I can definitely see us sort of transitioning away from the bonds in future. Yeah. Right.
Exactly. The seigniorage protocol is like a mini central bank. I've always seen it like that, and it makes most sense like that. But most of the teams that ran a seigniorage protocol didn't really understand that. It was mostly about, as you said, just running for the high APRs, and who is gonna exit first, leave it to die in 2 months, open another in a few months.
Exactly.
So since the beginning we knew that you had big plans with SubZero, making it into an ecosystem. But this is the first decentralized venture capital organization we have come across in the DeFi space. Can you please elaborate more on how the VCP is going to work and what would be the goal?
Sure. So I'll just quickly talk about how this came about. I think obviously we had the intention to develop additional services in the form of ZSwap and ZBank, and it started to make sense that we would, especially with the swap, want to have a native token for the swap, so it's not applying any inflation to the existing ecosystem, and that we would actually build that as a separate project, which will still benefit existing holders. So I better quickly clarify that. When we launch ZSwap, we're going to have a native token which is going to be called ZAP. That token, you'll be able to farm into that from SubZero. So existing holders in the SubZero ecosystem will be able to farm a certain amount of the ZAP token, probably about up to 15 or 20% of the supply on launch, and that will give them exposure to it. We'll also have exposure through the treasury. So the other change that we've done in our seniorage protocol is that we've added a treasury. The treasury earns 10% of the yield when we're above peg. So a little bit similar to, I think maybe how Dex Finance operated, in that they sell the peg token above peg in order to reduce the chance of everyone just sort of holding and then dumping at a specific point in future. We're issuing 10% to the treasury, which will be sold above peg in order to build asset backing of the protocol. So since launch, we've obviously seen a lot happen in the DeFi space with what happened to Terra Luna. We identified 7 key elements that we see as critical for the sustainability of a seniorage protocol, and one of them was really asset backing, because they did blow through their asset backing so quickly, and we've almost changed it to, it's like DeFi's changed to a like a Warren Buffett value investor mindset almost suddenly, and that we're avoiding anything that has any form of speculation or doesn't have a definite asset backing where you can get your money back, which is probably sensible in many ways, because I think it's possibly been too easy to create ERC20 tokens, and a lot of them haven't had value in the past. So I think this has led us to really look at where a token's value comes from and identify these 7 factors. So utility, asset backing, using the token as a store of value itself. Scarcity is extremely important. That's why the expansion of the protocol is really critical in considering what we're doing going forward, growing the network effect, and the future revenue. So we've got these elements that in mind that we're trying to achieve with the protocol in order to build value for the holders, and one of those elements was asset backing. So we're going to do 2 things which will benefit the SubZero holders. One will be allowing them to farm into our new protocol on launch. So they'll have like a initial farm offering that will be exclusive to those holders. But we'll also, and that means that we also we prevent the sort of damage that occurs in a lot of these protocol launches where they purely rely on a pre-sale, and then they create a liquidity pool where they only supply, say, 10 or 20% of the raised funds in the LP, and then users essentially can't get out and end up seeing these massive drops in price. Like we've kind of discovered a lot of elements that don't work in DeFi protocols, and we're trying to work around that and come up with realistic solutions to them. So in some of these protocols that we launch, in everything that we're talking about at this point in time, which is 4 different protocols that we're kind of working on, in some cases with other teams, none of them actually have a strong pre-sale element. So because we just see that what happens most of the time is they raise 100% of the funds, they supply 10 to 20% of the raise back into the LP, and then DeFi investors are just very short-term minded, which is understandable. People want to have access to their money, and in a lot of cases, but it is very speculative as well. So if even half of the investors sell within the first 3 months, the price is likely to be about 20% of the pre-sale price. So it's just a simple fact that liquidity's been withdrawn from the market. So we're really conscious of the problems in DeFi, and we're trying to work around them a little bit with this solution that we have in mind, and it's basically giving our investors access to new protocols, new launches that they wouldn't normally have on market. That's another critical element of the decentralized venture capital project as well, because why would we I guess I can get into this discussion a little bit more in detail in future, because we do actually have a mutual fund type concept or an ETF type concept that we're working on as well, where you may want to invest your safe money in a fully asset backed like Bitcoin or Ethereum sort of based fund that will have like a monthly rebalancing. But if you were talking about just a typical DeFi protocol, why would you invest in it if you're only going to have about 10 to 20% liquidity remaining after the initial pre-sale? And I think in that sort of case, it just the math just doesn't add up, and that's why we're seeing a lot of new project launches failing, and it's actually putting a lot of people off DeFi, pulling a lot of liquidity out of the entire market, and we're seeing this massive contraction. So it's kind of a difficult time in DeFi to be launching any kind of protocol. But I think what we're doing, which is kind of building equity through partnerships with existing teams, kind of like sweat equity, we're working for real income and earning our position in some of these launches with providing an advisory role or something like that. It will then allow us to build an allocation for the treasury. So I can come up with one quick example, if that's okay. So we've partnered with a really speculative project. It's on Doge chain, so of all places. So it's I guess like the Doge chain space is very immature and early. I do think that it really does have potential, because there's been about $300 million in capital bridged over to the chain in just a couple of months, or not even a couple of months, 1 month I think, and there's really strong potential there, but there's no legitimate projects on the chain launching. So we've partnered with a project that's just called Olympus Doge, and I'll share some of the details in the chat at some point in time, or I can do that after the AMA. But basically, they're like operating a own fork basically, but it's a docs team. The CEO is actually from a past project that I'm familiar with called Game Theory. So they're well-known guys.
I know them.
Been assisting them. Yeah, so we've been assisting them with development and earning a stake for our treasury. So now that project is actually going to launch via a what's called a stealth launch. So they're just going to launch the token, no pre-sale. That kind of offsets some of these sort of capital risks that I'm talking about. But that also presents quite an interesting opportunity. We'll basically be on the multi-sig. We'll earn tokens for our treasury. So it's just value creation through some of these other projects that we see launching. That's one element of it. The other element is building our DeFi ecosystem. So that's probably a smaller project where we won't have a huge share. It'll be a reasonable number of percentage points of their project that we'll earn to the treasury, and then build our asset base, I guess. So that's really key to building value in our protocol. Building that asset backing up, and the other protocols that we'll focus on will be the ones that we're developing directly. So ZSwap and ZBank. ZBank probably won't have a native token at all. So where possible, we'll avoid having a native token, I think, in some of the projects. But obviously with the DEX, there is a real need to bootstrap liquidity early on. But that said, even with the native token that we're going to use in the ZSwap DEX, we're going to have 10 to 20% or 10 to 20x lower market cap than the average native DEX token. We're going to have about 1/5 of the inflation of the typical DEX token, which is going to be really interesting. We're only going to incentivize pairs that we really critically need to incentivize, so that the native token holders are protected. And we also have like a native token liquidity kind of model that we want to consider as well, where as new protocols come on and partner with us, and in the launch of that DEX, they'll be able to earn a locked stake of the native token. So it's increasing the depth of the liquidity without locking up as much in the way of stables. So we will sort of release a bit more info on that strategy in future, because I think that's quite interesting. But the principal sort of purpose of the protocol, the roadmap's quite strong now. I'll drop the roadmap in the AMA channel just for people that want to have a look at it, because that's probably the best, I guess, graphic. It shows the main path that we're taking with the protocol, and that we're taking sort of two main channels. One is with SubZero, where we're building financial services, so the ETF, like an automated mutual fund, that'll basically pay a small percentage of the fees back to SubZero holders, and then compounders through ZBank. And then the other channel, which is the ZSwap project development, which will be building farms, building revenue through, revenue in a DEX is typically quite small. It's often about the partnerships and, launchpad projects, things like that. That's really where most of the actual revenue comes from. But also, add-on services, trading comps, predictions markets, perpetuals, things like that, that can increase the DEX revenue. That'll be the focus. Sorry, I think I carried on there a bit past your initial question, but
Yeah, you touched up on several of my later questions, but you did made quite a few good points. The pre-sale definitely needs a better way, either figuring out a better way to do a pre-sale, or just don't do a pre-sale. Because you're right,
correct.
most of the people will just dump it immediately. So I have found out that the projects that do well usually go through some kind of venture capital system, that people invest, but are, I wouldn't say locked in the position, but at least it's somehow agreed upon that they will not exit for X amount of time. And those projects usually do well. So it's like a pre-sale, but it's kind of locked pre-sale. So no.
Yeah, and that's something we could look at as well. I think in future, if there was going to be a pre-sale, that those tokens are locked for some space of time, so that you do have basically investors, not traders, coming into the protocol. Yeah.
Exactly. There's a confusion between investors and traders. Everyone wants to get in on this action in the pre-sale, but that's not for everyone. You need to be patient. You need to know what you're investing, and the team needs to know that at least this amount is not going to be dumped immediately. So they have some backing to build on to. Otherwise, it just dies immediately. And this brings me to the next question. You mentioned something about it, but not the whole. That with the aim of being a venture capitalist organization, you must have a substantial treasury, or aim to have a substantial treasury. Now, you did say you will employ sweat equity, and okay, I understand that. But as for other venture capitalist project, how do you see that?
Yeah, it's a good question. So I think we've only just introduced the treasury, and it's already sort of around $100,000, but it is mainly native tokens. So, combination of LP and native tokens. So our intention is to, once we go above peg significantly, convert some of those tokens into treasury assets. We obviously wouldn't be doing it at the current price. Basically, the treasury should act as the protocol's friendliest whale, effectively, buying when prices are low and selling when well above peg. And I think we may not see that environment for some time, but I think it will come. So we have the long-term mindset with this project. We have the 10-year share emissions set very conservatively. I think the time will come where DeFi comes back into the spotlight. Obviously, at the moment, it's all pretty negative in the space, but when that sort of market swings, it will swing hard, I think. And we'll basically be able to then convert some of the treasury native tokens into more substantial assets. We do still have a little bit of capital sitting outside the treasury that we are looking possibly to deploy, but I think it really comes down to the value of the opportunity. I probably wouldn't personally invest in about 95% of DeFi at this point in time. So it really has to meet a strict set of criteria for us before we'll would even consider deploying capital and trying to get a return on investment in this market. But that actually brings me to another point that at the moment, we are quite centralized, and I also expect that over time we will become more decentralized in the case that the treasury assets do build, then the Zshare token becomes the governance token of the protocol, and by owning Zshare you will be able to vote on the deployment of the capital. At the moment, there's not really the capital there to deploy, so we're not pushing forward any governance votes. It's really going to be based on how quickly the team can move and develop these additional projects and get them running and get revenue channels online for holders, I think. But there's obviously that long-term vision to become a purely community-governed decentralized venture capital protocol where we can then focus on investments in new projects, but it would have to be a very different market to this one, I think, to justify it.
Right. When you said it's not good time for DeFi today, especially not good for anything. The Queen died. God rest her soul. No. So no more Queen. You're from Australia. I don't know. Are you still in with the Queen?
Yeah, we are in the Commonwealth, so God bless the Queen.
So yes, it was something I found out today before the AMA, so I thought I'd mention it. Okay, now I'm gonna pass on the reins to Shilbro, and he's gonna continue the AMA.
Okay, excellent.
Awesome. Thanks a lot, Julian. Appreciate it. Hey, what's going on, Mark? Good to meet you virtually.
Yeah, nice to meet you too.
And thanks for being here, man. Appreciate it.
No worries.
I'd like to just start by saying I really love the idea that you want to get away from bonds altogether. Just because any protocols I've seen with bonds, especially during just say like the APY wars, they just completely deflate any native tokens that are tied to these bonds or whatever. They just ruin projects and ruin protocols. So overall in the long run, it's definitely a good idea to get away from that for sure.
Yeah, I think they're good for the protocol, but I just can't see why, as an educated investor, you would actually buy them unless it was as the protocol swinging back to the peg very heavily, and you say had, for example, inside info or something, then you were going to take advantage of it and sell at a profit on the other side. I think I just can't see it being utilized in a positive way for holders, and that's the concern. So it'll be something that we probably look to transition away from in future. At this point in time, it still does provide some benefit,
right,
by effectively burning the supply. It's not to say that they do nothing, but you have to believe in the protocol essentially to lock up your supply in bonds, to lock up your tokens.
Yeah, absolutely. I mean, they do have an appealing factor, right? They are attractable, and they definitely are not without utilization. That's for sure, because you can definitely make investors can definitely make a nice bit of coin on them. But like you said, in the long run, it's just it's just not really like sustainable and good for the protocol in long term enduring settings, right?
That's true.
But so anyway, yeah, and just one thing I wanted to mention, I really like in your white paper, which is not something I see often, is that you actually have a glossary there that explains some key terms and things like that. I don't see that often, and I think it's pretty essential because not everybody understands certain terms, and they'll read through it and not actually go see what it means. But if it's right there, I'm like, oh, okay, got it. So I really like that you have that there.
Yeah, that's something we have to do a bit more of, actually, just like education, because we can't have DeFi sort of existing off just the original investors and expect everyone to understand everything about DeFi because they've been in since the last 12 months or so. So although we did have a huge influx of new users around the time of like Olympus DAO time, Wonderland, and those sort of things, I think there hasn't been a huge influx of new investors and new interest, and we do need to focus on education a lot more. I think DeFi has a lot to offer, and we're nowhere near tapping into the real potential of DeFi. So I'm interested to see where it goes, and I do think the whole market sort of mindset will change at some point in time. It's just a matter of when.
Yeah, right. Absolutely. I think pretty much everybody in here will agree with that. That's definitely where the future of economics is heading, right? Is tokenomics and DeFi, right? So, but yeah, kudos, man. So anyway, I'll hop into my first question here. So you talked about this a little bit about having multiple tokens already. So, however, I would just like to know a little bit more about that because like during my time in DeFi, what I've seen insofar as the paradigm of protocols that are using multiple tokens, they have a difficult time because of multiple tokens maintaining like green price action. So, what is it that you have in place that will, have a more sustainable level price or level price action across the board with several tokens, if anything?
Yeah, so I think this is part of the reason probably why I want to eventually transition away from bonds, is that the perception is that by having more tokens, you have more balls to keep in the air, and it's not necessarily the case. So with our protocol, for example, the SubZero token is the main LP, and the Zshare LP is actually paired to SubZero. AbZero is an illiquid token, so it doesn't have an LP that's actively traded, and the value of AbZero will only go up relative to SubZero because of the simple like freezing and defrosting mechanism. It's actually always gaining according to the index. So we have that displayed on the website. The index will only ever increase basically compared to SubZero. It's not to say the price will only ever go up, but the index against SubZero will only ever go up. And then obviously Z bonds are also illiquid. So out of the four, there's two that we are really focused on maintaining the value of. But I can see that it can become a perception that we have more challenges because there are more tokens, based on what's been happening recently. So I think, when we do eventually remove Z-bonds from the options, it might make, just having those three tokens might seem a little bit more sustainable, but it's really just a mental shift or understanding that it is, there's really only one token that we want to maintain value on, which is the SubZero token. If Sub maintains its value, then Zshare will inherently have value because obviously the regulation, we call it, which is like the boardroom printing when we're above peg. AbZero will maintain its value because it has to according to the index. So there's really only one token that we need to maintain the value of. That token itself doesn't have any inflationary elements to it while we're sitting below peg, which is what I actually love about the Senior Edge protocol.
Awesome, man. Yeah. So basically, you have the reason for the multiple tokens is not necessarily, which is kind of what I've seen with the other protocols that I mentioned that use multiple tokens. They use these multiple tokens in terms of basically for them to make more money, right? That's really what it is. Now, and they have different utilizations, right? And they're not actually supporting tokens. So what I'm gathering here is that this multiple token setting here is kind of like a network of supporting tokens to maintain some sustainability for your native token.
Yeah, correct. So I think like other protocols have done it where they've got multiple peg tokens and then they're actually paying out multiple types of rewards. In that situation, yeah, you do have the challenge of trying to keep multiple peg tokens price up, and that can actually become quite challenging, obviously trying to create use cases for all of these different tokens. Whereas for us, it's really one use case. So I think in many ways we could actually, possibly like consolidate the protocol down to one token in future. But I think there is some value provided by the AbZero freezing element, that it is rewarding the long-term holders, and there is also intention and utility behind the design. And I do think that the Seigniorage protocol has a lot of elements right. It just, it may be a little bit out of favor at the moment. But I think if you get the core value aspect right of the peg token, then it will perform. So if you get your utility, asset backing, create the impression or create legitimate store of value in the token, ensure some scarcity and that inflation's not too high, build network effect and have potential future revenue streams, then having these additional tokens is not really doesn't really harm the protocol. In fact, it is an advantage because the Z-share token is a governance token. So like all of the tokens work in together and they do have different benefits. But I can definitely see that we might transition away from the typical tomb fork type model, both for the sake of perception as well as the fact that bonds don't really provide anything to the protocol, whereas every other token in our ecosystem does provide some benefit. I really like the SubZero that's our unique, I guess, selling point. If you were just looking at tokenomics, in that, if you are a long-term holder, this is a protocol where you're not going to get dumped on. If someone intends to come in, farm rewards, and sell, they can actually pay you about 20% in the process, 3% freezing and 17% defrosting. So it just reduces your potential downside from short-term minded investors. Yeah, it can still happen with Z-share. So that's there for speculation. If people want to speculate, we've kind of got both bases covered with the tokenomic structure. So I see that as a positive.
Yeah, absolutely. Definitely in the explanation you just provided, it definitely provides some clarity on my initial question. And yeah, I definitely see it as a benevolence for the protocol rather than a detriment. So yeah, it's pretty awesome, dude. Yeah, so we've talked about Freezer a couple of times. You mentioned it with the whole freezing and defrosting aspects of it, which is great, and I think it'll definitely be a success in that matter. But just like anything in this space, right, it's always dependent on stable or green price action, right? But I see like that you do have a 3%, and you mentioned this before. You have a 3% tax on deposits and a 17% tax on withdrawals, if that's correct.
That's correct. Yeah.
Which is great, but I've also seen protocols, for instance, like just as an example, Thor, right? With they have a declining sale tax, right? It starts at 50%, right? But over the course of about 30 days, it goes down to about I think 10% is the lowest, and which is good. But at the same time, I don't know if you are familiar with Thor, but and I've seen this with other protocols as well, with this sliding declining tax, right? Their tokens basically go down to nothing at some point, and I've seen this happen with every one of them. So, and I've also seen their response to it, right? And that's really what I'm getting at here is like, so if just say the price action isn't doing what's like conducive to your investors and to your token, like will you adapt accordingly, basically? Or will you stick to your guns, right? So you're going to stick to your plan, or will you start adapting and like kind of freaking out or what have you?
Yeah, look, I think we'll just stick to the plan. I mean, we've started below peg. We're comfortable below peg. If we have to sit below peg for some space of time, that's how this protocol is designed to operate. And the reason it fails is because people give up. So, like, there are some pretty big differences to nodes, but I think the key one is the consistent ongoing inflation that they have. So yes, while they have a similar kind of tax element, ours doesn't decrease, but for now, I mean that's something we could consider. But I think their inflation is just consistent, regardless of what's happening in the market, regardless of how much revenue the protocol's generating, regardless of the supply and demand dynamic. It's just constantly increasing the inflation. Where we differ is that even in the freezer, so you could possibly see it as though by freezing your tokens, you're getting extra yield when we're below peg, and that's going to be detrimental to the protocol. We actually have an element in there where that yield increases above peg as well. So when we are when there's regulation occurring, so the boardroom is printing, we actually feed 50% of the revenue into the freezer. So basically your yield increases when above peg, and it decreases quite a lot when below peg, but it's still one of the best ways to invest in the protocol. So we still highly encourage it at any point in time. But if we are above peg, the yield will be higher. And I think the biggest difference to those sort of protocols that you mentioned is that they purely survive on the supply and demand dynamic. So and also they probably commenced at a time when there was just extreme demand for high yields, and they weren't able to back it up with revenue. So we're actually quite lucky. Like we could have potentially gone down that path with the potential TOOM partnership. Anything there could have actually taken us on a pretty dangerous path to unsustainability, which would have been good for short-term investors. But I think the way we're really focused now is on building protocol revenue and building benefits for investors, long-term investors, that are going to make them want to hang around in the protocol and not have that sudden sort of, it's not even a sudden rush to the exit. It's just the continued bleed that will happen when your market cap reaches, say, $20 to $100 million, and you don't actually have any revenue whatsoever. Whereas, with us sitting at about a $250,000 market cap on our PEG token, could probably make enough. One person could probably make enough working a full-time job, to actually support the protocol at this point in time. Our emissions are quite balanced. The market cap's just going to be very easy to sustain. If we can create $10, $20, $50,000 in protocol revenue, put that into buybacks, then there's real yield there. And I think what's really critical, though, is we don't fall into the same trap that other seniorage protocols have done, in that when they get above peg, they allow the users to continue to print and print and print, and then dump. And it's the first user who basically sold who's going to benefit the most. With us, we will be. That's why we've created the treasury and given the treasury an asset of the native tokens. If the price does pump due to excessive demand, then we can sell those tokens to build an asset backing, and then that gives us the potential to do some other elements. So something that you can see on our roadmap that's in consideration is like vested bonds or reverse bonds. So we might then, like, say the treasury grew beyond the value of the PEG token, we might give users the ability to cash out through the treasury, take maybe a reduced percentage, so that it's still beneficial to the long-term holders. Them cashing out those tokens is effectively burning supply. There's lots of interesting things we can do when we reach that point. That'd be a good problem to have. But right now, obviously, as you said, we're focused on the inflationary element, ensuring that we do have sufficient revenue to sustain the yield in the protocol. But because our market cap is so small, it's quite sustainable at this point in time, or I see it that way.
Yeah, absolutely. And I think you definitely hit the nail on the head there with the inflationary aspect of it, with the other protocols, and just that being a key factor in maintaining the sustainability of your project is by combating that, right? And doing the right thing, rather than providing, okay, here we are, everybody come in, supply and demand, that's it, and then leave, and then we're done, move on to the next one, right? So no, you're trying to make something that's enduring and lasting, rather than just some pump and dump, bull crap.
Yeah, exactly.
Go ahead.
Yeah, and I can see that with the direction we're going, especially with new projects in the umbrella. I don't want it to be perceived that way either. So we're really going to be focused on in low initial capital outlay for investors, give investors opportunity to actually make money in a DeFi protocol for a change. So that's the interesting thing about the Doge Chain team that we've partnered with, and it's kind of a meme sort of project, but at the same time, I do think it, you don't know what could happen with that protocol. So just say, for example, we're sitting at 250K market cap, and we get 10% allocation of equity in this new protocol. There's been like meme DAOs on Ethereum which are still sitting at $20 million market cap even now after the crash. So we don't really know. Like, that's just a bit of a moonshot opportunity that I'm kind of putting to the side, and we're not going to rely on. But you can just see that 10% stake in a equity stake in a project that takes off could provide substantial return to our investors while we only have 250k capital. That's not to mention ZSwap that we're building, where our holders are going to be able to farm the native token of the DEX, as well as us allocating a portion of that to the treasury. So, even aside from building value through tokenomics and building value through equity shares in other protocols, even just purely focused on a revenue side of it through, say, DEX fees, I think we can get to a point that our market cap is sustainable, because we probably only need 50k of revenue a year to pay quite good rewards to our SubZero holders and sustain the price. But the upside is something a lot higher than that. Yeah.
Yeah, absolutely, man. So that's good. That's good. All that is great. Now we talked about this before as well, about the treasury fund, or the TIF as you call it, right?
Yep.
It's going to be using a combination of SubZero tokens, subsidiary project tokens, third-party tokens for investment purposes, right? So, but what type? Well, just backing up for a second, before it was, I heard you say, obviously in this bear market, pretty reluctant to, and maybe not even just in this bear market, but just in DeFi as a whole, right? Because we've seen so many rugs and just, shit projects and things like this. So that's good to know that you're reluctant with that, right? But what type of investments do you think you'll be making, especially in this bear market, if any? And, with the investments that you do make, are you going to be transparent with all your investors?
Yeah, so 100% transparent. So our treasury wallet is actually tracked on the website. So you can go onto the DApp and you can click on treasury, and that'll actually show you what the treasury is holding in the form of tokens and liquidity. So that's going to be 100% transparent at all times, to ensure that users both see, both get the transparency on what we're doing, but also have an understanding of how much asset backing we have at any one point in time, because I want them to realize the value going forward that they have in the protocol as we build the treasury assets. It's only a new thing, so as I said, it is mainly natives at this point in time, but as that grows with some of these additional projects, I think the transparency is really critical. Any of those wallets will be multi-sig, and we will expand the number of users on the multi-sig to include, community members potentially in future as well. At the moment, it is fairly centralized, like most DeFi protocols are, to be honest. But the team is working for the growth of the protocol to achieve that end goal, which is to build a substantial asset base. And I think it kind of has to be that way at this point in time, where we're at this small market cap, because we do need to be relatively nimble and take advantage of opportunities that may not be publicly available. It's not about using the treasury just to go and invest in Bitcoin or Ethereum or anything like that. It's really about finding access to opportunities that you wouldn't normally have on the market. Otherwise, I don't see the significant value in the treasury. You know what I mean? Like, if anyone could just go and invest in those protocols themselves and get 100% exposure to it, then that's probably the best path to investing. To matching what our treasury is investing in. So our treasury is going to be focused on opportunities that you wouldn't have access to on the open market, like a typical VC would, but in a more decentralized nature. So hopefully, as the community grows and people understand the concept, we will sort of democratize the process a bit more and bring it more to the community in terms of the opportunities that we have. But at this point in time, we, particularly where there's no capital outlay, we'll consider most opportunities, provided that the team is doxed and we have trust and faith in what they're doing, essentially. So, yeah.
Yeah, absolutely, man. And that's exactly, that's the core of DeFi, right? Is utter transparency pervading throughout the entire space. But this isn't always the case, even when sometimes they say it's the case or it's supposed to be the case. So it's good to hear that you have all these things in place, especially right there on your DApp. It's so easy and accessible for people to see. That's perfect. So yeah, that's amazing, man. Good to
Yeah,
hear.
I agree. I mean, we all got into DeFi because we love the concept of pure decentralization. It hasn't been the case, obviously, for most protocols in that people just weren't aware that most of the times the developers just got full control, and there's not really they don't none of these protocols have been half as decentralized as what people were sort of sold on, and
Right.
we do have
Yeah.
the vision to get there eventually and build something substantial. It may even involve completely, different model than the seigniorage model, but it's all sort of, we're finding our way, I guess, on this journey with the investors and with the market. So
Yeah.
it's going to be a journey.
Yeah, absolutely, man. Yeah, I don't mean to. I'm not like laughing at you or anything. It's just it just hits right at home because there's just there's been so many projects that I'm sure everybody listening here and pretty much anybody who's been in this space for longer than a month has experienced the centralized aspect of the decentralized space, right?
Yeah,
So,
it's unfortunate.
yeah, but anyway, yeah. So I appreciate your time here, Mark, with me. I'm going to pass it back to Julian so he can give it to some of the questions that the audience have. I know they have some great questions there. So I appreciate you having me on, man, and listen to me talk nonsense. And
No, thank you for your
yeah,
time.
good to have you, man. Good to meet you.
Yeah, thank you for your time. I appreciate it. Thanks for having us
Okay,
on.
okay, great stuff. We have some good questions here, and I'm gonna give you a little bit of a job. We decided that you, Mark, to choose the best question from the audience, because before the AMA we had a talk that the emojis can be botted, or friends can do emojis for others. So we decided that you are gonna select the two best questions from the audience. The questions are in the AMA questions channel, just up.
Okay, yeah.
The first one is
Do
pretty
you want me
good.
to do that now? Or?
Well, I'm gonna ask the some that I found that are pretty good, but you can also see
Okay,
if you find some that you really like, you can answer it. So the first one is
sure.
pretty good. Being SubZero a protocol for long-term staking and providing liquidity, what is your plan to ensure sufficient DEX liquidity, fulfill market orders, and maintain adequate TVL values in SubZero treasury to ensure profitable return for both you and your partners?
Yeah, it's a good question. I think at the sort of heart of that question is how do you maintain DEX liquidity while
Right.
also giving people rewards, basically,
Yeah.
while trying to maintain treasury value and pay people, who are holding AB0. It's a real challenge. So the key one there is that we're going to have a native token of the DEX, which is separate. So that's going to isolate the DEX, or isolate SubZero holders from potential inflation that might occur in a additional token in the DEX. Because if we were purely to, the other alternative, I guess, is to purely incentivize DEX liquidity with SubZero, say Z-share rewards or something like that. But I don't think that's very fair to Z-share and SubZero investors who might want to have exposure to other potential investments as well. It might give us excessive exposure to the DEX token. That said, the DEX tokenomics are actually that we're working on are really strong, and that it's greatly reduced inflation, and that I think in itself will bring stability, because we've seen it a little bit recently that DEXs launch and they actually have really bad native tokenomics, and doesn't inspire confidence either. So I think it's a challenge, maintaining the reward rate that will attract investors and attract liquidity, while also maintaining the token value. That's a challenge in itself. So our objective with the DEX is for 50% of the fees from the DEX to go into the ZAP token in the form of buybacks, and the ZAP token will have a very, very low inflation rate. and then 50% will come into SubZero holders in the form of SubZero buybacks and rewards paid to the SubZero holders. So this is documented, I think, already in our docs. If not, we'll be adding more detail to this very soon. But there is a kind of a rewards plan in place that I think incentivizes the it incentivizes liquidity, but at a low inflation rate. Now, I think the challenge there is you can attract a lot of liquidity in a short space of time with high rewards, but as we've seen, the reward token is only going to dump in price, and when that dumps in price, your reward rate drops too. So you're actually better off starting at a more conservative reward rate, because people who are farming with, say, low risk assets like stables, they're going to be happy with 10%. You don't have to give them 50% on day one in order to bring them in the protocol and wreck all of your investors who bought the native token. It just doesn't have to happen. It will grow organically if you're sitting at about 10 to 15% APR on stable assets, because who wouldn't want to get 10 to 15% on a stable coin? That was the promise of Luna that didn't deliver. So those sort of realistic APRs on the liquidity are really key, I think, from the start, and getting people in that want to provide liquidity long term and know that also the base token is not under the same inflationary supply dynamic is really important. So it's critical that we educate the community and the LP providers that our native token is not under the same sort of inflationary dynamics that other DEXs have provided, so they're not immediately dumping the token, and they may actually want to have reason to hang on to that token for the sake of governance or separate rewards on that token or farming liquidity with that token. So it's a difficult challenge, but I think we've got the formula for it, hopefully.
Yeah, that's a great answer, and you can see that you have thought about this, and you are figuring out how to proceed in this direction. Okay, the next thought is pretty good as well. Now that you have changed direction towards a VC while still keeping the best elements of a Tom fork, do you have any ideas of what additions you would implement in the future that you have liked or have worked well with other projects? SubZero has shown to be a stroke of genius, that I agree with. So in that mind frame, will you be targeting new ideas that will bring innovation to SubZero?
So I'm a little bit hesitant to sort of throw lots of just ideas at the Seigniorage protocol and see what sticks, because we've seen it already occurring with a lot of other tomb forks, and we don't have to. So that's a great position that we are in. We're probably, like, it may not seem as though we're doing as much like GameFi or casino type stuff as some of the other forks, but to be honest, I don't want to invest my time in something that's not going to provide a long-term return on investment for the holders. I think that's a very short-term minded activity. So like there are a lot of things that we could add into the protocol. If we just wanted to have announcements and add-ons and short-term utility, but I'm really focused on the long-term utility. I think the casino elements can have a small amount of long-term utility, but in most cases it's just sort of feeding off the existing sort of user base, and it's not really all that innovative. But I can't really pinpoint anything at this point in time that I'd want to discuss that will be innovative like SubZero, but everything's up for consideration. So it may be possible that we completely pivot away from this model at some point in time, but I think I think we are building something that has quite strong value behind it. There's conscious intent behind the utility and purpose of each token. The only thing I can really see us sort of removing is possibly the Z bonds in future, and then but we are always looking for utility for our SubZero token as well. So that's something I can mention there, is that it will be a base token of the DEX as well. So we'll have swaps being automatically routed through the SubZero token, so that it's getting utility in that way, and that SubZero LP providers are earning a slightly larger stake through that, as well as having good reward incentives, because obviously we do want to incentivize people to use our ecosystem, but we'll yeah, again, be very careful to reduce the emissions for a lot of pairs that we don't need to support with the DEX. Yeah, so I can't really pinpoint anything at this point in time. I guess innovation-wise, that's the short answer.
Yes, yes, yeah, but it's okay. It's okay. If you're not sure, it's better not to throw out just stuff out there. Now we have a simple but good one. What's your favorite part about building on top of AVAX? Have you ever taken into account any other blockchain? This is a lot of Tom forks go to other blockchains, and why have you decided to stay on AVAX? Could it be that it is more vulnerable than the other networks, or is it because this network will be the pioneers in this field? Okay, this doesn't make sense, but the first part does.
Yeah, so I think AVAX is kind of the opposite of more vulnerable than other networks. If anything, it's probably more decentralized and secure than other networks, Ethereum included, especially with the merge coming up. But yeah, so on the first part of the question, we haven't branched out to other networks because we don't have the need to yet. So unless we were creating another tomb fork on another chain, which is not really something that I have any intention to do, I don't see any purpose behind branching out to other chains yet until we have utility of our token there. So we don't want to just be paying rewards on multiple chains, because then it becomes an unsustainable model. We want to basically pay rewards through one reward system that's benefiting the long-term investors, and that happens to sit on AVAX at the moment. We are kind of, if I was to pick any L1 that I think will be successful, I'd probably pick AVAX at this point in time. I do want to support the chain, and I think that's critical that we take that approach, given that we are pegged to AVAX, that we're giving back to the AVAX ecosystem, and that we're building utility and dApps and features for use that will draw in a greater user base for AVAX, so we can sort of get a double benefit from it, like not just through investment in our projects, but also increasing the utility and user base on AVAX, which basically will help increase the value of our peg token, or what we're pegged to. Yeah.
Right, and we have several that ask about the KYC and audit. Do you have an audit on the contracts?
No, we don't have an audit, but it is, we're basically utilizing existing sort of functions and contracts that have been out there and have been battle tested. So I think, it's certainly something I'll get done, particularly with anything where I foresee some level of risk. So let me explain, because it can seem like our protocol is kind of complex, and that there'd be some risk potentially in unaudited contracts, but basically you can kind of think of our protocol as a tomb fork, which as you know is secure. There hasn't been any security breach in Tomb itself, and then you can kind of think of the SubZero element a bit like Xboo on Spooky Swap, in that we looked at that as inspiration for some of the functions, and ensuring that it is a battle-tested contract, because it basically, they have had about, I think, $50 million in TVL at that point in time. So if anything was going to be a target, it would be that. And we used, core functions from that for the development of the SubZero protocol, and then added just some elements around the tax side of it. So it's pretty secure. I can't imagine any issues with it, but at the same time, we've had multiple developers working on this, so we've had the benefit of that already, and I think auditing will possibly even be something that we look as a service, might be something that we actually look to provide in future, because we are partnering with small DeFi protocols. So essentially, it's just the peace of mind of knowing that multiple developers have looked over the contracts more than anything. But I understand that the stamp of approval can mean something as well. So it's something that we're definitely open to.
Okay, we are nearing almost 1 hour and a half.
Yeah, sorry.
this was very constructive. I'm gonna let you read through the rest of the questions that we have. If you see if you see a question that you really like, maybe answer it. If not, just let's pick out the 2 winners of the questions that you most like, and we can slowly
let's just go for those first 2 questions, because I know that only one of them is a community member, so I want to be fair here. So Logus767, that was an excellent question, and Boppity Boop, excellent question as well. So I think they were the first in, and very, very good questions. So they're the winners of the $50 worth of Z-Share each. And because we do have so many questions in such limited time, I'll actually respond to some of these other questions in another AMA or in a text format, maybe a Medium article or something in the next couple of days, because there are so many good questions here, and I'm just conscious of everyone's time. But
we have several that are repeating, several about the audit. So, but yes, we have some good ones as well. So
yeah.
So thank you again. Thank you again for coming on here and presenting all that you're doing. I will definitely track you more from now on. I'm curious about the DEX and how it will turn out and take shape, and the little project on the Doge chain. I'm curious about that as well, especially because I know the guys. Thank you everyone for tuning in, and thanks so much to Mark for taking the time to speak to us today. We'll be uploading the audio from this to YouTube if anybody wants to hear it again, or if you're hearing it on YouTube right now for the first time, please hit the like button and subscribe to the channel. We'll be doing a lot more of these in the future, and we hope to see you again. Once again, I'm Julian, here with Shilbro, and we're Defi Raiders.